Got it.
Cool. All right.
I appreciate it. Thank you.
Thank you.
Okay. Looks like it's you and me, Casey.
All right, well, let's do this.
Yeah. So
I actually thought this was yesterday, so I'm happy that
well,
I
it
made it.
was yesterday, and then it got pushed till today.
Okay, good.
Yeah. So what I was going to say, I didn't create a PowerPoint because I don't think it required a PowerPoint. What we're going to talk about is really two things, and you could tell. Let's start over. Since it's you and I, we can talk about whatever you want. So you tell me what you think you may want to talk about. I'll tell you what this was going to be about, and you'll see if it makes sense for you. So,
Okay,
the first part was going to be about how to set the right expectation for a buyer when they're prior to talking to them about getting pre-approved. And then the other was, what's the actual process behind the scenes for the mortgage so that you're aware of what things take place. Hey, Jordan, how are you feeling?
Not great.
Oh, I heard. I just ran into Katie.
Not great.
Well, thanks for joining. It's just the three of us at the moment.
That's all right.
Yeah. So we were talking about two things. One was going to be, I was going to talk about expectations for a new buyer when we connect with them about getting pre-qualified or pre-approved.
Okay.
So that the handoff goes really smoothly, because what we're finding is that people are, your earbuds not working or AirPods? No? Okay.
No.
All right. And secondly, we're going to talk about what happens once we take a loan and what goes on behind the scenes, so that if a buyer calls you and says, I don't know why they're asking for this, or what's going on with my file, you'll understand enough from this conversation what that process is, and then hopefully answer any questions they have, or just guide them back to us to say, well, the reason why they're asking for it is because they need it, and here's the reason. Typically they won't ask you for things that they don't need. So we run up against that a lot. We're seeing a lot of that again come up right now. So that's what I thought I'd talk about. And I didn't do any PowerPoints or anything, because I think it's more just conversation around it and Q&A all the way through, because it just seems to work better that way. So, hey, Elena. So I'll just go ahead and jump in.
Hi, Mitch.
Hey, how you been?
Good, busy.
Yeah,
Good.
Good. All right, well, this won't be too long. We're gonna talk, you jumped in a little later than what I just shared, but we're going to talk about two parts: expectations for the buyer on when we contact them for becoming pre-approved, because we're finding that is much better received, and they're not feeling so caught off guard when I call them. And secondly, what happens after the loan gets turned in, and what processes take place behind the scenes, so that you'll know. One of the things that we like to talk about in this is when you say, hey, we'd love to move the closing date up, what does that entail? Beyond an amendment, it entails, in fact, you don't even need an amendment to move up a closing date, only to push it out. But the things that happen behind the scenes on our end is quite a bit. So any movement in dates, or price changes, or appraisal valuations coming in low, et cetera, I want to touch on those items, because sometimes it feels like, oh, it's just a change of a button, it's technology, and the reality is it's actually more than that. So it seems to be a timely moment with the real estate industry to talk about that. So I'll just jump into the first part. So when you refer me or any other lender, because this is across the board, there's 4 pieces of information we review with the client. We call them the 4 pillars. So it's employment and income. I'll talk about that in a minute. Monthly bills, credit history, and money available to use to buy a house. So if you say to a borrower, hey, I'd like to have Mitch give you a call, what he is going to ask you and go through with you to make sure he gets a good lack of a better word, good story behind what your information is, he's going to review these 4 items with you. So if you could have that information available when you guys connect, that way we'll be able to review that information a little bit easier. what happens is if they don't know what we're going to talk about or what information they need, they get very, very anxious and very frazzled on the phone. And like, oh, I can't find my W-2. I don't know what I don't even know oftentimes they don't even know their rate of pay. They don't know their hourly rate. So they have to go search and find their pay stub or jump online to get their electronic one. So when they have that information up front, it's so much easier, and the conversation, I'm telling you, just goes much better. And so then we just go through. I don't need to go into details about what we go through, but I'm happy to if you have questions that would like me to expand on that detail. Anyone want to hear about that? What I ask? Yeah. Okay.
Yeah, we're
great.
here. Don't mind.
Okay, good, perfect. So regarding the employment and income, excuse me. So first thing is I will ask to cover a 2-year period of employment. So a 2-year history is really important, as you guys I'm sure know. So the 2 years could cover their current job for a year, a prior job a year before that. It could cover 6 months on their current job. They had a 3-month gap because they couldn't find a job. Then they had a 6-month job prior to that. Then they had a month gap, and then they had another job for a year. So what I'm trying to accumulate is a 2-year history of actually working. So I may end up going back 3 years because there might be a year's worth of not working within those last 3 years. So we do need to cover 2 years of actual employment, not just 2 years back from the day I speak with them. So that's one part that people don't understand. They think, well, it's 2 years, my 2-year history. I didn't work for 2 years, but here's where I did work during those 2 years. So we go back further. And then the second thing is someone was in school, and it could be traditional schooling where they did undergrad college or got a master's, or they were in a trade school. Schooling is considered employment as well. So if they were in college for the last 4 years, they were in accounting and they got an accounting degree, and now they got employed, and now they're employed for 2 months. Well, they don't have a 2-year history of working, but their schooling will constitute employment time because now they're working in the same field that they got their diploma in. So we can use that as well. And a lot of people don't know that. And a lot of people say, I've only worked for 2 months. I can't qualify. So they don't even try. And the reality of it is they for sure can, and that is fully used as employment.
Nick, I have a question on that.
Okay.
Does that work if you end up getting a job that's not the same as like your degree that you went to school with, or does it have to be in line with each other?
Well, ideally in line with each other, but oftentimes we can tie in the education to the employment. It just depends on what type of employment they actually got into. So we would just ask the question and try and figure it out and see if we could make that work. In a situation like that, instead of being employed for 2 months, they might want to see them employed for 6 months in order to use that income. So they don't have to wait 2 years. Do you have an example?
No, I was just thinking, a lot of people go to school for something and then they end up doing something else. So I just wanted to see if that worked.
Yeah, it could. That's not uncommon for sure. But like if someone went to school to be an accountant and then they became a hairstylist, those are obviously very, very different. But if they're employed at a hair salon, so they're not self-employed and a subcontractor, but if they're actually working it with an hourly rate, what the industry wants to see is that they can actually keep a job for a period of time, because if they weren't working while they were in school, the job history becomes more important at that point of just being able to keep a job down and work it full time. So now a lot of people who came out of school have had part-time jobs, so we can use part-time as well as employment history. So it's something I dig into a little further at that point, if it is different than what they graduated with.
Okay, great. Thank you.
Yeah, of course. In that example too, we may end up going with a cosigner also to help support employment and income, especially if they're newly out of school. Sometimes parents will help in that case to co-sign and then look to refinance once they've got the history of employment behind them, and if it makes sense to refinance from a financial standpoint. So we talk about everything. The other part about employment, about income is, so I always ask what other income they may have. So there's income such as alimony, child support, investment income, dividends and interest. This is all assuming they're not self-employed for a moment. Sometimes people tell me their income is $120,000 a year, but they forgot that they got a one-time bonus that they've never received before, but that was part of their W-2. So I have to ask questions, is that a base salary, an hourly rate? Do you work overtime? Do you get time and a half on your overtime? Is your bonus consistent, and have you received it for the last 2 years? And will that bonus continue going forward? We don't know the amount, but is it still available to them should they meet certain criteria at their job? So a lot of detailed questions go beyond just tell me how much is on your pay stub or on your W-2s for the last 2 years to determine what income can actually be used. In addition to that, a lot of times people have second jobs, and there's very concrete criteria around using a second job. The borrower must have been working on 2 jobs for a 2-year period at the same time. It doesn't have to be the same second job or the same first job, but they have to have a history of working 2 jobs for the last 2 years consistently in order to use that second job's income. And the reason for that is it's not easy to work 2 jobs when you have a full-time job and a part-time job. So we have to make sure that they have the capacity and ability to work 2 jobs and consistently keep both those jobs at the same time. But we can't use it. A lot of people have it. So we have a lot of people doing Lyft and Uber and Amazon and all the different, what are they called? Starts with a G. There's some term now for people working other jobs. Does anyone remember it? It's like, give it, I can't remember. Anyway, so we can use that income if we can document it. Sometimes a veteran, if they're a veteran buying, they have what's called VA disability income. We can use that income. So I always ask, 1, if someone's a veteran, 2, if they have disability income to use it. And so we just dig deep into those income sources. Some people have a base salary at a job, and then they have a second self-employed company. We can use that income as well. We just have to document 2-year history of receiving that income or 2 years tax returns. So it goes back to the same thing. They have to have 2-year history of working 2 jobs.
It's called gig work.
Thank you. That's what it is. Gig
You're
work.
welcome.
Yeah, that's a gig. The gig economy. Very good. Thank you. And it's very prevalent right now. So that's the employment side. The next, alimony child support will be another form of income that we ask about if they have that coming in or going out. That would be considered a monthly bill if it's going out. So the second piece is monthly bills, kind of good feed into that. So monthly bills, a lot of times people say, well, I have my cell phone and I have car insurance and I put gas in my car and all those things. And they're very important for people for their own budgeting, but we don't take that into consideration. We're going to look at anything that shows up on a credit report. So car payments, credit card minimum payments, student loan payments. A lot of student loans are still in forbearance. They have not had to make any payments. So when we run a credit report, it'll show the balance of the student loans, but it'll show a 0 payment. And so we are required to use a amount that's been dedicated by Fannie Mae, FHA, and Freddie Mac to take 1/2 of 1% of the total loan balance that they owe on their student loans. And that becomes the minimum monthly payment. So if they owe $10,000, 0.5% is going to be $50 a month. So that's how we determine if they qualify, what they have to qualify with on a payment. There are things outside of the credit report that people don't think about. So some people have timeshare accounts that they make payments on. There are alimony child support payments. There are IRS back income tax payments that people have. So I have to ask these kind of off the wall questions, but they come up, and if they rear their ugly head and you didn't ask for it, you could not qualify possibly. So it's important that I dig around in all those parts. If their name is on any other real estate that they're aware of. So some people say, well, my name is on a property with my grandma, and it was just for safety reasons. She doesn't owe anything on the property, so there's no debt, but I do have my name on there. Well, as an owner of property, outside of a mortgage, you still have 2 other responsibilities, and that's property taxes and homeowners insurance. So we have to include that as a monthly obligation to that borrower for qualifying, even though they said I have no obligation. Yeah, they've never written a check for any of it because they were just on there for security, but they've become an owner and now they're liable for those payments. So we do have to include that, which seems odd to people, but we still have to include that on there. And then if they do own other real estate that actually does have a mortgage, then we go into, is it a rental property, et cetera, at that point. Any questions on that? Okay, because those are some unusual parts that come up. Third item is credit history. Most people these days have some idea how their credit is. I would say 80 to 90% people say, I know my score, I use Credit Karma, or I use some other service. That's a great barometer for me to at least get an idea of what their credit could be. So if someone says they have a 590 credit score with Credit Karma, I know that they've got some credit issues going on that we would definitely have to address. And if they tell me they have a 720, then I know we're in good shape, and my score will probably come in at 713 or something like that. So our mortgage credit reports will always come in lower, typically, it's not always, but typically, than a consumer credit report, because we're looking at them borrowing hundreds of thousands of dollars. So the algorithms that are being used for mortgage credit reports are totally different than a consumer report. Consumer report is just saying, how do I stack up with everybody else who has similar credit history like I do, as opposed to actually an actual item of borrowing and a lot of money to borrow. So it's just the way they do it. And they change those algorithms all the time on how they want them to come back based on what's going on in the economy, really. So if people are having trouble making payments and we start seeing defaults on just regular credit card payments and mortgage payments, we've seen credit scores tighten up, and that becomes more challenging for us. But we have seen that. It's very obvious when it happens. But they don't tell us it's happening, it just happens. And then the last item is money for buying a house. So here's the general question. Do you have any money available to use to purchase a home? Yes, I do. How much do you have? I have $20,000. Great. That is not the end of the story, because now the question is, where do you have that $20,000? Is it in the bank? Is it at home in a safe? Is it in crypto? Is it whatever it is? And you'd be shocked how many people have cash at home. And I bet all three of us or four of us here probably have some cash sitting at home. And there, people want to use that to buy a home. The challenge is we can't document cash, and we don't know where they got it from. We don't know if they ever have to repay that. So cash is unfortunately not acceptable for buying a home. So we have to look at alternative ways to either place those funds into their account and say, okay, when are you actually looking to buy a home? If you're not looking to buy a home for the next 3 to 4 months, put the cash in the bank now. Let it sit there for at least a 2-month cycle of not having deposits like that big a deposit on your bank statement. And then you can have that money in there. We don't have to worry about it because it's not documented anymore on a bank statement. But if they're saying, no, I really want to buy a home next month, I need to, and they have all these funds, then we look at alternative ways of them getting funds, and primarily it's gift funds. So we basically look at saying, okay, do you have a family member that has $20,000 that can gift that to you to help you purchase a home? And then you and they can do whatever you need to do as far as the cash you have to work with to replenish their account. But that would be after the fact. So there's ways to work with it if there's other avenues of someone they know, typically, well, it could be family or friend, doesn't matter, where those funds could be replenished for them. Does that make sense? How we can do that? Okay, so that's an important one. The other parts, then, if they say, well, I don't have a lot of money, I've got $5,000 in the bank and that's what I've got. Then of course, then I start to asking more questions. Do you have a 401k? Can you get gift funds from family? Do you have any assets that you have that you don't own anything on, but you don't need and you're willing to sell them? So crypto, gold, it could be collections at home, a stamp collection, a coin collection. It could be anything. It could be a mountain bike because they're worth a lot of money. It could be anything that, how about a set of nice ping golf clubs? So there's things that have value that they could sell to use to buy a house. We just then have to be able to figure out a way to document what they're selling and prove that they owned it before they sold it, and then track those funds coming in. So scenarios like that, we will try to do gift funds still, because that's a whole lot cleaner and simpler, and then have them utilize the cash they got for the sale of those items to replenish the gifter's account. There's a variety of different ways to consider what they could borrow against. If, let's say, they owned a car free and clear, they could go get a loan against the car, and then we should include a monthly payment. So as long as they qualify, but they can go get a new loan on it and use that for money to buy a house as well, because it's an asset that they own. And then the last thing I talk about with them, so that's kind of the prep for them. Obviously, you're not going to go into that detail, but those 4 items, and those are the things, that's how detailed we do get with them on the phone, because I want to be able to give them really good, accurate information for their knowledge. And I want to give you guys, as the realtor, good information to know that we're set up and ready to go when they're ready to look for a house. However, more importantly, is I do ask them where they would like to keep their monthly payment from a standpoint of comfort level and affordability. And then we usually end up somewhere between their maximum qualifications that I say they can qualify for and their comfort level of a monthly payment. Because people right now don't understand the where that payment's going to come out to based on where rates are and the cost of housing. So someone will say, I want a $2,500 payment. That's really comfortable, but I want to buy a $500,000 home. And unfortunately, those two don't go together. So they end up coming in more like, and if I say they qualify for $3,500, we may end up at $3,000 or $3,200, because a $500,000 property with 5% down is going to be a higher payment than $2,500. So for those who can afford it, they just wanted to keep their payment lower. They work with that. And if they can't, then we start talking about different levels of property or condos or townhomes at a lower price at that point. So I will be as adaptive as we can to make them feel like they could do something. The challenge is they may not get up to a level if they can't afford to make a higher payment. And I've talked to many of your clients that fall into that category at times, and it's just the nature of the beast. We hope that rates will come down, but when rates come down, that means property values are going to go up. So I don't know that we're going to get much of a break or a benefit from that, but today's market is offering that benefit. So really, this is the time for somebody to be buying a home, in my opinion. But can only say that so many times to the same client, and have them make decisions that are comfortable for them. So that's that piece. Any questions on that? Yeah, it's very simple. That conversation I have with them goes really well. It's just a matter of them being comfortable and understanding what is going to happen. The other thing I do, so like if you did an email introduction, I would send an email back saying, hey, look, thanks for the intro. Look forward to connecting with you. Please let me know times you can meet. Prior to us getting together, here is a list of questions that we will go through together. If you could have this information available for our call, it'll make the call much more efficient. And so I have 8 questions that are listed that go through with them. So know that if you just do this email intro, I'm going to send that back out so they'll see that what to plan on. But if it's a verbal intro, then it would be good for you to share that with them and say, he's going to talk about these 4 items. Could you have this information available for that conversation? Also, it's no obligation. There's no cost involved in the conversation we have. If they want to get to the point where we run their credit report while we're on the phone together, there's no cost for them to pay for the credit report. They would only reimburse that cost if they got to closing. So, all right. So that's kind of my daily job, is pre-approving people, and that's the fun part, because you'll be, as you know, everybody's got a story, how they get to where they got to, and we try to help navigate all of the guidelines within their life's financial story and make those meet up together so we can get an approved loan. So it's
one quick question.
Say again?
One quick question.
Yeah.
I know sometimes buyers that we've talked to, they have they're reluctant to have lenders run their credit because they're afraid it's going to affect their credit score. Can you speak on that and how to get around that reluctancy that they sometimes have?
Totally. And I'd say 80% of people have credit reluctancy. It's it's an interesting disease we all have. So 2 parts. One is I first tell them I totally get it and I respect the fact that you don't want your credit run by many different companies or at all sometimes. So if they're in a position where they're not looking to buy a home for another year, which I do talk to a lot of people like that, then I tell them, I don't need your credit report today. It's too soon anyway. But if you think you have any credit concerns at all, now's the time to run the report to actually look at working on those items so that we have 12 months or 9 months or 6 months to work on them. And then after 4 months, the credit report that I run, it's called an inquiry, is what shows up on the credit. After 4 months, that inquiry falls off their account and there's nothing on there at all after that. So it's good to know that. Also, a credit report is good for 4 months. So if they told me they want to buy a home in the next 120 days, then I would tell them we can run the report now. If there's anything on it that we got to deal with that is of concern, we can do some repairs and then rerun a brand new credit report. So we do that rapid, it's called a rapid rescore of their credit. So that's where people have more challenging credit and have a good idea that they do. If they're not sure, but they know they may have had some delinquencies, then I ask them to run their consumer credit report first. Provide that to me. I can work off of that to give them some ideas, but then we do work into the conversation. When you think you're ready to buy, we must pull your regular report for the mortgage so that we can use that as our kind of our roadmap. And that'll get us to where you want to go for qualifying. So that's part A to that question that I get a lot of. Part B is if they're actively looking to buy a home and they're actively talking to a couple different lenders, there's some guidelines, which I'll just reiterate, but I think you guys know it, but I'll say it anyway. So if I were to run a credit report today, that same client can talk to 3, 4, 5 lenders, and each lender can run a report as long as it's within 30 days of the time I ran the first report. Their credit score will not be impacted whatsoever by another inquiry, but those inquiries will appear on the credit report. So if I run one and another lender runs one, and then they go to a third lender, that third lender is going to see the first 2 inquiries from me and the other company. When I run the credit report, my credit inquiry does not impact their credit score whatsoever. It's only the next company that would run the report would have impact by my inquiry. If it's a mortgage company, that reduction, if there is a reduction in points, won't happen for 30 days because they have 30 days to run as many reports as they want without having any impact. If they were to go buy a car a week later, they're going to see all of our inquiries and that will have impact for the car credit report. So that's a different animal. It's not a mortgage credit report. So that's part 1. Part 2 is just lost my train of thought on the second piece of that because it's an important piece. So let's say I run a credit report and a week later another lender runs a report, but they've went out and charged up their credit card during that week, and their credit company reported to the credit bureaus during that week, then their score could be different because they reported a higher balance on one of their credit cards. I've gotten phone calls saying your credit pull screwed up my credit. I'm like, no, we didn't. My credit didn't do anything. If you were to compare it, and they're welcome to go through line by line, they did something during the time each report was run. So that could influence what that score is also. So we respect that though, Jordan. So I have actually a client right now who's saying, I don't want you to run credit. I said, you know what, let's look at the consumer report. She has like 800 credit scores, so I'm not concerned. So I said, you know what, I can give you all the information you want at 800 on your score. I cannot issue a pre-approval letter yet because I have not seen an actual credit report because you're not allowing any of the lenders to run the credit reports yet. She is talking to 2 different companies. So at some point they have to make a decision to have someone run it. So that's the explanation I give them.
Yeah, it's not very common, but I think if you're in this long enough, you'll run into somebody that says, well, I don't want my credit pulled. And it's going to hurt my score. And that's good to have that information because we've gotten around it, but I don't know if it's the best information we've given them to say like, hey, it's okay and it's necessary, but knowing that, if if you're gonna buy a home right now, it is what it is. We have to have it. And if you're gonna wait, it's gonna drop off in 4 months anyway. So
Right.
that's good to know.
Yeah. Yeah, and I get that probably 50% of the time. So it's very, very prevalent and talked about all the time.
Yeah.
And I address it just like that, in a way that helps meet their concerns. And then they decide, ultimately they say, look, so that's that. That's kind of that whole piece on qualifying. The process side is really interesting. I think it's because nobody really knows what goes on with a mortgage after it gets turned in, the process of it, unless you were a loan officer at one time or a processor at one time. Even processors don't know what loan officers do, but loan officers totally know what processors do because we track it and we have meetings and we watch our files every day. So the consolidated version of it, and I want to consolidate because it's an hour on its own. I want to talk about what impacts the seamlessness of a process file. So when someone goes under contract, well, let's start over. When someone gets pre-approved with me, we do a full loan application. We gather their supporting documents. We run their credit. We figure out if we have to address anything on credit and all that. So we are processing that file really from day one. If they're an active buyer looking to purchase a home, they just have to find it. So we're verifying employment. We're making sure W-2s and pay stubs line up. We're making sure they have money available to buy the house for what they want to buy. So that's this kind of, we call those to be determined files, so that we're really ready up front, so that when you make an offer, we can close soon if you need to, which is, I'm feeling the market's coming to that place again. We're already seeing 20-day closings coming back. And they're doable if we're well ahead of the game. So the processing starts really right away. Once the file's actually turned into my processor, what she does, they're all women, so I'm going to say she for now. They will validate the information on the loan application. They will, if need be, send out a written verification of employment to the employer. They'll do a work number verification of employment, and a work number is a third-party company that verifies employment and income for employers. So employers go to these companies, feed them on a every payroll time frame in the month basis, when the employee started, what their position is, what they've earned so far this year, what they've earned for the last 2 years. So all that data gets pushed there. And so instead of those companies have to deal with employment verifications all the time, they feed the information to these companies. Then we as a lender go to those third-party companies to get that information. There's about 3 companies that take care of that. They charge for that. They charge $40 to $50 for us to get a verification of employment. That'll be included in the client's closing costs. So it's part of something we disclose to them, so they're aware of that. So if they have 6 jobs in the last 6 months or in the last 2 years, it could be very expensive to get those verifications. Some companies don't, like smaller companies, they just have individuals that fill it out and we're done. But some are very large and they don't. So the Boeings and the Zaos and the Ball Aerospace and all the very, very large companies don't do it internally anymore. Every now and then, I'm dealing with one right now. That's why I'm bringing it up. We have a gentleman who has been working this place for 3 years, but his employer hasn't reported to this third-party company since January 5th. Well, we're already in middle of March. So that data is no good for us. So now we've had to ask the bar to help find someone in human resources or payroll so we can get that information completed on a different form. And that just creates not an issue. It's involvement by the borrower, more time waiting for it to come back, and just what we have to do. So why we want to get started as early as possible on files is so that we can get all this stuff behind us and not have to be worrying about, oh my God, we can't reach this person. They went on vacation. They got sick. No one else can do it in the company. We've run up against that. So we really try to knock this stuff out in advance, which is a great message to provide to your borrowers or buyers is we want this, the goal of this transaction is to focus on buying the house, but financing is really important. So let's do that while we're on our search. Here's what you can do to really help hedge on that experience. And I'm telling you, it's night and day. I see it every single time. We're so far ahead of the game versus playing catch up through the entire 3-week transaction. So, and sometimes it happens, right? Some people are like, I wasn't even looking, but a house came up and we went and saw it. I'm like, oh my God, it's the perfect house. Let's buy it. That's fine. We deal with that. That's the reality of what happens. But if you have that time frame to kind of preempt everything, it's so much more of a pleasant experience. So then after the processor does all the things she does, we order the appraisal. So here's a good one. So the appraisal, there's 2 ways we get to order the appraisal. One is the borrower has to sign a document electronically with all the loan disclosures. That's called the intent to proceed. What that means is they've reviewed all the disclosures we gave them, and they agree to move forward with getting the loan and buying the house. And they saw the appraisal fee on this. It's called the loan estimate. Knowing that they've seen the appraisal fee, we're allowed to order the appraisal and then charge them for it. And so we order the appraisal right away. They'll get a link to pay for the appraisal on their credit card. And then that appraisal will be scheduled or ordered with the appraisal company, of which then they'll reach out to an appraiser. If for some reason they bail and don't close on the transaction before the appraisal is done, so if they terminate, let's say for inspection items, then they'll get a full refund of that money that they paid for on their credit card. It takes about 3 business days to be refunded. But if we don't collect it up front, they won't schedule it. So everything's about timing. And then we tell them, if we do have the time, please let the appraiser know not to go out there until at least a day after the inspection completion. Because obviously we don't want them to spend that money if they're not going to buy the house. But if you have a really quick closing, we may not have that time to wait, and we just let them know you're going to end up possibly paying for this appraisal if they get it out there sooner than you have an inspection resolution. We're happy to postpone it and push it out. That just means we have to push out close date, appraisal date, all those things that we've been through before, all of us on the phone. But we want to make sure we don't spend their money for no reason. It's very important to us. Sometimes if the client doesn't respond to their initial loan disclosures, Jordan, we had that with our last client, it delays us from being able to do anything on their file. We cannot process it. We cannot verify employment. There's tons of things we can't do. And it's not that they don't want to do it. Sometimes they don't see the email. Sometimes they forgot to do it. They saw it, but they forgot to do it at home that night. So we are very much on top of communicating with them to please take care of it. And if they say they will, they will. And if they didn't by the next day, we ask them again. If they didn't by the next day, I'll be calling you guys to say, can you please help me? They're not doing what we need them to do. And so your participation might be needed to just kind of nudge them along and go, hey, Mitch can't work on your file until you guys acknowledge that you received these initial disclosures and you're okay with them. What those initial disclosures are very basic documentation. It's their application. So they review it to make sure it's accurate. It's tons of disclosures about we don't discriminate, that we service our own loans, that we communicate with them if something changes on the loan file, that they have to get homeowners insurance, that if they create fraud, the FBI is involved. All those documents you've seen at closing, it's the same documents they sign initially on the initial disclosure. So those are just really crucial because it's very heavily regulated that they must sign those before we can do certain things. It doesn't happen a lot, but when it does, it's always on the files that you're trying to close very quickly. So once that happens with the processor and she gathers all the information, she will then push that to our underwriting team. Our underwriting team has 24 to 48 hours to pull the file, review the file, and give us their feedback on that the loan's approved. The loan's approved with conditions, which is more typical because most times we're getting our loans turned into the underwriter before the appraisal gets back in. So we'll have an approval subject to the appraisal coming in. So the underwriter is going to review and go, looks great, but I have a question on, you're missing a bank statement. We haven't proven that the earnest money check cleared their bank account yet because it hasn't shown up yet, if that's the case. Looks like there's a big deposit in the account. Where'd that money come from? We have to now verify that, which we try to do all up front, but could come up. income, the underwriter calculated income differently than we calculated it. So those things get addressed before we contact the borrower. We will address those items together and review them to make sure we're on the same page of what's needed. So we only need to go back to the borrower one time to get the right documents. But here's what happens very often. So the borrower's like, yeah, I got 3 of the 4, but the 4th one I can't get you. And the answer is, well, why not? And then we address what else can we do to get what we need. And trying to think of an example of what they can't get. Well, let's say a cash deposit that we didn't catch maybe, and they saw it somewhere, we didn't see it, or something like that. Then we have to kind of go to plan B and, well, what else can we do to get around it? We could, for using that in earnest money, let's say they did their earnest money, and the earnest money ended up being a charge on their credit card, which has happened. Well, that's not their money, right? That's a cash advance on a line of credit of a signature loan. So we can back out that earnest money and not use it and not have to deal with tracking it, because they can't. Back it out and not have to prove where it came from. But they also won't get credit for that on the day of closing then, because we can't prove it was theirs. So what will end up happening is they'll get that money back on the day of closing, but they'll have to bring that $5,000, that, let's say that was the earnest money amount, they'll bring that $5,000 to closing along with their down payment and closing costs. So we can, as long as they have enough money to cover it, we can take care of it that way. We don't have to dig further and really frustrate the heck out of everybody to figure out where that money came from, as long as they have enough money to cover it. And that happens more often than you think. So we deal with that quite a bit. And it's an easy solution. We actually learned this morning, well, it was last night, but this morning, we no longer need an amendment from you to request that the money is refunded back at closing. But title is going to have them sign a document saying, we are refunding your earnest money that you gave us upfront at the initial beginning of the contract. So it's one less step for you and us to worry about getting signatures on, that Fannie Mae is now accepting, which was huge because, again, we deal with that more often than you think, and it's a pain to find that out.
Can I just rerun that again? So like if
Yeah.
I'm giving you $5,000 and I use my credit card, right? It's on my credit.
For
whatever.
earnest money, let's say it's
For earnest money.
right?
Yeah, for earnest money.
Yeah.
So what I'm bringing now is an actual check, or they're taking that money out if they're wiring the closing costs, and then you just set it, which makes sense. So then they refund the original $5,000, which then you can pay back to the credit card.
Correct.
Okay.
Yeah, but normally, if it's their money, we give them a credit for that 5,000. So if they needed 50,000 to close, now they needed 45,000 because of their 5,000 earnest money. But in the example, if we can't use it, they still have to bring 50, even though they gave 5.
Right.
So they're really bringing 55 in total.
55. Okay.
And then
Yeah.
they're getting back the 5,000 at closing.
Perfect. Okay.
Yep.
Thank you.
Yeah, it's just to avoid a lot of stuff. Like a lot of people get gift funds from parents, but they do it in advance. You know, we always tell people, please don't get money from family. Let them wire it directly to title, so we don't have to trace those funds. But if the family member did it in advance of them looking to purchase the home, or said, I don't want to wire it to title, I just want to give them a check. If the parent doesn't want to deal with gift funds and proving that they gave the money to their kid, then we will do it that way as well.
Yeah, I had mine. Now I remember, because when we bought this place, I had the bank send the check. I had because it was my investment, so I had them write the check. I think Charles Schwab wrote the check, so I didn't have to put the money anywhere. So that makes sense.
A little bit different because it was your home that you purchased.
Yeah.
But you still have to validate you had the money to do it, which you probably did.
Right.
Some. So
Yeah. Okay.
So that's kind of a little trick to the trade on that. So we go back and forth with the underwriter if need be to make sure we're getting exactly what they want. We get back to our client, ask them what they need or if they can provide that. Goes back to the underwriter. It takes another roughly 24 hours. They'll re-review that information. They may say 4 of the 5 look great, but this 5th item you sent because you couldn't get exactly what I wanted. still not meeting what I'm looking for, that's a possibility. So we figure out what is it that we can get that would be acceptable. That doesn't happen a lot because we're very detailed about what do you need when we don't understand what they need. And there's very few instances that we don't get what we need the first go around. So it goes back to underwriting. They complete their review and they issue what's called the clear to close. And clear to close every now and then could have conditions around it. So it could be prove that they've liquidated their money out of their, like you were talking about, Casey, out of their investment account. So if it's all tied up in stocks and bonds, we've got to prove that they liquidated those stocks or bonds with an activity report from that investment company to show they actually liquidated and now those funds are available to use to purchase the house. Because what some people do is they say, here's my money, it's in my investment account. And then they go, you know what? I don't want to liquidate my account. The market's down. I don't want to do that. I'm going to now get money from my parents, but you don't need to know that. You already proved I had the money. That changes the nature of the loan at that point. So we can't just go with, well, now your parents are giving you the money. If you can't prove you've liquidated, now we actually have to get proof of gift funds, right? It changes everything. We already have clear to close at that point. So that could cause a little bit of a fire drill at that point. So we really let people know up front, please make sure you give me the information from the accounts that you're going to be taking the money out of. And if it changes, I need to know right away, because otherwise we may end up having a delay of closing. So we get our clear to close. Then there's a trigger immediately for my closing department to start working on the closing disclosure. So they will start getting all of our loan information created and sent over to the title company so that the title company can provide their side of the closing disclosure information, which is the real estate side. And then we can send the closing disclosure to the borrower. But there's a lot of back and forth with the title company. Sometimes we'll say to them, you didn't put the seller concession on there. And the title company say, I don't have anything that says there's a seller concession. Can you send me the amendment that shows it? Sometimes the title company tells us there's a seller concession and we don't know there's a seller concession. And that changes the nature of the loan. At that point, that file has to go back to underwriting because that's a change of circumstances in the file. So, that brings up a good point. If you have any changes, please make sure the lender is aware of what those changes are. That are seller concessions, which is typical. So it's either seller concessions, price reduction. Now, if you're going to have inspection repairs done, and you're going to provide the inspection report, not the inspection itself, but the inspection resolution, and we have to have proof all those items were completed. So we have to have receipts. So we typically don't request that inspection resolution document to avoid having to deal with all that. But if you want to give it to us, or if there's something on there we need to see that you want us to see, and it has other items on there, then we're gonna have to address proving that all those other items have been repaired and taken care of. It's very rare that we get that document for obvious reasons. We try to avoid it. So if there are concessions for resolution items, we prefer to see an amendment that indicate that the seller agrees to provide $3,000 towards buyer's closing costs and prepaids. End of story. It's so obvious what it's for. And it's so crazy that Fannie Mae doesn't ask for the inspection resolution or an inspection at all. I'm just shocked in the years I've done this, they've never gone to the point of asking for it. But at this point in time, they're not.
Do you see that coming in the future, Mitch?
No, there's like been no talk about it.
Because like
But
you said, it's painfully obvious. 90
yeah, it's so obvious. Yeah, it's just as bizarre that they haven't gotten to that point. So I haven't yet. No, there's been no talk.
They don't even want to know.
Well, I don't want to go down that rabbit hole because it's not a fun one. I do want to say, kind of alluding to that, we always tell a little bit now and then talk about escrow accounts for improvements or a roof repair for a roof replacement and want to escrow for that. I learned at my company. So as long as the appraiser makes no indication that the roof needs to be repaired, that's where it starts. Then we will allow a roof escrow for a replacement of the roof as long as title handles the escrow collection of those funds. Because since we're not going to request it, we're not going to control those funds. So as long as title agrees to, which I just had a closing where title did, they agreed to, then we don't care and we're good to go. And so that was really cool that our company will do that, because my previous company would not do that if they were aware there was some escrow for something like a roof. So, so again, if it's alluded to, so like, the other one that's more common is the pipes that are, pipes out to for the drainage pipes and out to the street. If those pipes aren't clear, they're cracked and they need to be replaced. A lot of times people want to just do the work after closing. And again, if it's called out somewhere along the way, then we're going to have to get the work done prior to closing after they do their inspection. So the sewer line is what I'm speaking of. So that's something we can work with on a case by case. So getting back to CD, the closing disclosure, we get all those numbers, they come together, we make sure everybody's on the same page. Oftentimes those get delayed if there's an HOA, the HOA hasn't completed the status letter yet. So what we'll do in the time, if we run out of time to get it to the buyer that fourth day prior to closing, is we'll send out an estimated closing disclosure to say, hey, we got to at least start the clock. Can you please sign this one? We let them know it is going to change because we're still waiting for title to get the documentation from the HOA or whatever it is. And so it's not a hard call for us to make, but it feels weird to the client, like, well, why are you sending it to me if it's not accurate yet? And so we have to go down that explanation of it's because the government requires us to have you have received it 4 days prior to closing, so that you're aware of the numbers for closing, and you have 3 days to kind of work through it or us make any changes as needed. So we're in a place where we do need to make a change because we know we don't have everything, but in order to keep the closing date the same, we need you to acknowledge that you received it. And so the big key word there is receiving it doesn't mean those numbers are final. It just means they got it. So we do communicate heavily on that piece of it. Like, it's not saying you agree to all these numbers, you're just saying that you got it on this date. So that's how that goes down. So once assuming that's an accurate CD at that point, now we're done. We don't do anything else, and we close. My company doesn't have any funding conditions typically, so we don't have to worry about sending back signed docs or anything like that at closing. But if the buyer is bringing something for the closing, that was a closing condition, then we do actually have to send that back in and get it reviewed while we're at closing to make sure it meets the criteria. I haven't had any since I've been here, but things used to be like we couldn't get a gift fund bank statement from the parent until the day of closing for whatever reason, so they brought it with them to closing. Or they brought money from a different account. This has happened. They told us it was coming from one account. It came out of a different account. We never even knew that different account existed because we didn't know. We now have to get 2 months bank statements from that account to show that they have the money in that account. That's rare, but it happens. So very, very rarely though will we have any funding conditions. So I just want to touch on 2 things and we'll be done. So let's say you say, hey, we'd like to move the closing date up. And I always will say it's kind of I hate to say it, a standard response because it's an important one. We want to accommodate everybody's wish to close sooner, but we definitely should wait till we have clear to close first. Because we don't have clear to close and we change it, and now we need those 2 or 3 extra days to figure out all the conditions that we got from underwriting. Now we're back to changing that closing date all over again back, and people get bummed out about that. Second thing is, if we change a closing date sooner, then we have to go back to they or us have to go back to their insurance company and say the effective date of our homeowners insurance now needs to be on the 29th of March instead of the 31st of March. Sometimes that could change their policy charge. And now all of a sudden we've got a CD out there with the wrong policy charge that has to be redisclosed. And if the charge goes up and the payment goes up, it has to go back through underwriting if anything like that changes. So a change of a close date could have that kind of an impact as an example, which, we don't think about that. We just say, everybody wants to do it, let's go for it. But that's the direct impact on that. If you change the purchase price and you go, hey, well, you're dropping the price. Well, a drop in price means we've got to redisclose a new loan amount. The appraiser needs to make the adjustment on the appraisal. You've got to do the amend. It's got to go to, everyone's got to sign it. We may have to talk to their insurance company for a possibly lower or higher coverage of their policy. Typically, if it goes down, we don't need anything, but sometimes we have to increase it. So there's more implications behind the scenes that take place to adjust for a closing date change. And the CD would change now because the number of days of prepaid interest changes as well. So it just affects everything. We can accommodate it all day long. We just want to make sure we don't do it until after we have a clear close. That's the reason for it. Any questions on that? No, okay. And that's the process. Are there weird things that have come up in between? Totally. Every day, something weird comes up that we didn't expect from our clients, or they change their mind and do something a little different. That's fine. We accommodate that. My comment is I will always ask for your help when I need your help. If we're not being able to get what we need to make sure we meet the closing date, or we at least meet the contract date so that we don't put clients' earnest money in jeopardy. So if you get those calls from your loan officer, usually it's they need help because they're not being able to provide what is needed to get there. And it's amazing, another voice from you guys. Next day we have what we need sometimes. My processor asks for it and they say they haven't been responding. I'll make a call or send a text. In 20 minutes, I have exactly what they needed, but they just weren't responding to the processor. Not because they don't like the processor. It could be because it's in the middle of the day and they're busy working and then they forget when they get home. I'll call them at 5:30 or 6 or 7 at night when they're at home. They're like, oh yeah, I can get it for you. And I don't say, but we've been asking for 3 days and Melody's been trying to get it from you. What happened? I just say, great, I'm glad I called you tonight so we can handle it. So, but we have to work as a team, including our borrowers and buyers for sure, because we're depending on them to do that and get that information. So, any questions on any of that?
I have a question because I always want to review this. When we first go under contract, what are the documents that I have to send you?
Fully executed contract signed by all parties. So if you're using CTM, I'm going to get the live version once everybody signs.
Okay.
Right, so that's cool. Then if there's a post-occupancy agreement, we need that.
Okay.
And if there's any counters, I need that. So
Okay.
anything you do up front from day one on the contract, I need all of that. That's it.
Okay.
That's all I need at that point.
Okay.
If it's a condo or townhome, I'm not going to come to you for this, but I may if you know it. We then have to get the name of the management company for the condo and whoever the master insurance policy is with. So we have to get a hold of the insurance agent who insures the condo community.
Okay.
So those are the two things we get. So oftentimes sometimes it's in the listing, I know. And sometimes it's not. So I always call the listing agent. So when I call a listing agent to introduce myself and tell them you're approved, the buyer's approved. And I say, if you guys end up accepting this offer, I'm going to need your help in getting this information. So if we go under contract, I'll call them again. It's just another touch for me to then say, hey, can you provide that to me so I can start ordering this information? And we got to get our condo stuff taken care of. So those are the things that we would need from day one going forward. And then after that, it's if you have any amendments whatsoever, we need those. And typically the resolution we don't tend to request. If there is.
Mitch, why do you guys request the PCOA right away? Are you curious about what possession looks like, or if there's any monetarily going on?
Yeah, because it's got to be, they can't be longer than 60 days after closing.
Sure. Okay. So you're just double checking that.
We're validating that. Yep. That's really all we're validating.
That 60 days is an important piece that not a lot of
It's a
people
huge
know.
piece. Yep, exactly.
Yep.
Yeah. I've seen two recently, my last two contracts where they had them, and I haven't seen them in a while. So they're coming back.
They are coming back.
Yep. And it's part of the negotiating. I'll let you stay there. I won't charge you, all that again.
Yep.
So. Great question though, Casey.
I was just trying to figure out, I don't have a way to open it up, but I can't remember. Can you actually put the lender in the CTM? Can you add them to the
Yeah,
CTME
yeah.
contracts?
Yep,
Oh,
I
I
actually,
don't know why I just drew a blank on that. I was like,
That's
wait a
okay.
minute, I can do that right in the contract thing.
yeah, exactly. So
Yeah,
what
okay.
so what I ask if you're writing an offer, I tended to ask, please include me on the email that
Yeah.
you're sending. Because that lets me know that you've sent the offer to the listing agent, and that's my trigger to call them.
Okay, that's right.
And
Okay.
now I've got all future live contract changes. So if it gets signed by everyone, I don't have to come back to you again and say, hey, can you send me the contract? I already have the initial one you sent out at time of contract, and then I'll get it signed. If there's any counters and stuff, I'm pretty sure. I don't know if you add it, if the counters, I guess if the counters added in CTM, I would get a copy of that too. Because I do see them kind of listed below in the body of the email. So,
I guess I need to get busy. I'm getting a little rusty.
yes. You don't want to be rusty.
Ugh.
It's
Nice.
funny, even Katie and I heard a very top producing agent. He says, like, even when I go through my like slow periods, he goes, I get rusty on stuff. I forget how stuff works sometimes. And I'm like,
Yeah.
I do it too.
Yeah. Yep.
It can happen.
It does happen, and it happens to us too. We have so many little boxes to check on our end for the loan file, and don't forget this, don't forget that. Did you check the bank statement, make sure there's no large deposits? Oh God, I saw the first statement, but they sent the second statement in 3 days later, and I didn't see that one. There's a lot of stuff that goes on in these files.
As the market picks up, we're seeing like escalation clauses again and stuff like that. It's like, man, I haven't seen one of those in like 6 months. Let me go back and look at a contract 6 months ago and see how I did.
Yeah, exactly. Like you have to keep those little notes. Like this is a contract that I did an escalation on, so I don't have to search for one. I
Right.
like put a little note in there. Go back to this one.
Yeah, but it's gonna happen. We're gonna get there, I think.
Hey, I have a question real quick, Mitch, and it could be a big can of worms here. As we chat with people about building wealth, things like that, and I've heard it and I've never had anybody do it. Can somebody use future leased income as income to qualify for another property?
Future
an
lease income
executed lease.
from which property? From what property?
Say somebody wants to turn their current home into a rental and want to buy another house, and they can show that their mortgage is $1,500. They have an executed lease at $2,200. Can you use $700 towards their income on their next loan?
We cannot use it as income on their next loan as actual dollar income. We can use the rental income to offset their current mortgage payment. So it goes towards liabilities as opposed to towards income.
Got it. Okay.
Which is really what you want, because you get a bigger bang for your buck there.
Got it.
So we can take 75% of that new lease agreement, and that we will take to offset their current mortgage payment, and that'll determine if there's a positive or a negative or a break even on that mortgage payment to be a liability or a positive cash flow.
Got it. Okay. I think
That's what you just did with me. Is that correct? Didn't we just go through this, Mitch, with me purchasing
Yes, we talked
a
about that.
rental property? Okay.
Yep, exactly. Now, if they're buying a property for rental, we'll do the same thing on the new property. We'll take 75% of what the appraiser determines the rent is and use that to offset the new mortgage payment on the new property they're buying as a rental.
Got it.
Okay.
So it's the same calculation, 75% of the rent. It's just a matter of is it the subject property they're buying, or is it their departing residence, as we call it, the home they live in,
Got it.
Okay.
to offset it. Now, the other thing, when you're doing a departing residence, you bring up a good point. People say, I want to rent my house out, I'm going to buy another home. However, I don't have a tenant yet, and I don't want to move out and have to show you a lease that's currently in force to be able to offset my payment? And the answer is, the good news is we don't have to show it in force. It just has to be enforceable within 60 days from the day you close on buying the new house. So if I was living there and I got, and Casey said, Mitch, I'll rent your house, I don't need to move in for 2 months. Great, let's sign the lease today. I need a security deposit. We need to prove that deposit filtered through my account as the tenant, the new landlord. Then I, as the lender, can use that new lease, even though it's dated 60 days after closing, as set at 75% to offset my current mortgage payment. So that's how that works. So there is some leeway and wiggle room on the date of the effective date of that lease agreement.
Okay.
So, yep, we do have that quite a bit.
Cool. Thank you.
Yeah, you got it. All right. Well, good to see everybody. Have a good rest of your Friday. Have a good weekend. Elena,
Thank you so
nice to
much.
see your name on the screen. It's been a while since we've connected. And I'm here to help anybody. If you need anything, I'm around this weekend. Whatever else you need, let me know.
Okay, thanks, Mitch.
All right, you guys. Good to see you. Feel better,
Guys, have
George.
a good weekend.
Yeah, you too. Bye-bye.
Thanks, Mitch.
You're welcome, Elena. Bye.
Bye.